For primary reason that Japanese corporate restructuring continues at pace. Value still exists at a good level in Japan. I mean, one of the things that we're all going to struggle with, I think, in the course of the early part of 2025 is valuations, and in Japan it's still pretty compelling. So if you work on that basis, corporate sector looks good value, restructuring continues to add value for shareholders, assuming that we don't get derailed by the politics on a short-term basis, and the Bank of Japan probably holds fire for another couple of months, which I think seems to be quite likely, then the outlook for Japan, relatively speaking, is pretty good.
And so do you think they'll hold fire for a couple of meetings?
I don't know. It really all depends. Obviously, everybody's waiting for firmer details of what happens as far as the United States and trade policy. So we'll have to wait and see. And from that perspective, it would seem to make sense that if you are being faced with the prospect of big tariff increase on key Japanese exports to the United States, that you don't necessarily want to start pushing up interest rates that are just ahead of a potentially quite significant contraction in corporate growth.
But isn't 25 basis points more signaling than changing anything on the ground? Because, you know, how much does it really move the needle when it comes to the cost of borrowing in Japan? Also, in terms of adding more strength for the currency, because the currency is already weakened.
Yeah, but I mean, don't forget that the currency is weakened primarily not so much because of the yen, but because of the strength of the US dollar. And that's been something that we're confronted with across the board. Pretty much.
But interestingly, 2 weeks ago, the currency had strengthened all the way to 149,
yeah,
right?
It did.
So there's
and
been
now
a fair
it's
amount of
reversed
volatility.
a bit, but yeah, it's much more a question of strength of the US dollar than anything else, particularly post the election result. That's probably not going to change anytime soon. I think prudence would probably dictate that they will hold fire on interest rates, but you know, it really all depends on what the short-term pressures are that the BOJ is looking at. On a longer-term or medium-term basis, it would suggest that holding interest rates is probably prudent.
And going back to your original point about tariff impact, we spoke about China, we've touched upon Japan. What about South Korea, which is marred, of course, with its own internal controversy on the political front? There is that Korean discount that people keep talking about. And then also Taiwan getting wrapped up in this entire issue with Trump talking about onshoring a lot of the chip manufacturing. How does that play out? I mean, how bad does it get for those two regions?
Well, it's bad for Asia, as we've been saying, and it's one of the reasons that we're underweight.
But funneling down specifically for each of these markets.
Each of those countries are being faced with exactly the same issue, which is constraints on your number one major export market. Obviously, from the perspective of Taiwan and Korea, there's probably a little bit more of a strategic overplay, which may act in their favor from the US's perspective. Which is certainly a more positive thing, but it's still going to affect them, just like every other economy that's export-focused.